John McCagg here with Liberty Aid Academy. LibertyAidAcademy.org, the only place you're going to get a trust and live the rest of your life not paying income tax and not reporting income tax. The only way you're going to get it is copyrighted. Go check out all the testimonials from all our super happy people who have learned this information and now have the information themselves. Go forward. We teach a course. You're not beholden to us. We just teach you how to do it, and then you know how to do it. Like, get it. Okay, so common law. This is a private, common law, irrevocable ecclesiastical trust. Those are kind of its definers. We call it, McCagg Mastery Trust here. But we already said private, just did a video on that. A private trust is one you create yourself. That's all it means. Okay, private. Common law. Now we're on to that one. What is this common law issue, eh? Common law versus statutory. Let's go into this a minute. This is fascinating stuff here. Let's go. All right. Difference between the two types. It is important to first distinguish the differences between the two before deciding which is right for your situation. Statutory trusts involve real property held by a trustee with the intention of selling. Okay, any property goes back into the trust. All right. Many businesses choose a statutory trust for the following reasons. Great. Many businesses do. Okay, great. Okay, so statutory trust, great. Statutory governing laws are regularly updated. Okay. All right. In other words, you have to follow the state laws. Oh, okay. They're created at the state level. Great. All right. Bankruptcy features, internal affairs are regulated. Okay. The government's all up in your business. The state has a way to create a trust. I guess who's looking into your business? The state. Oh, okay. Do you want that? Oh, that's safe. Have the state up in your business. No. That's stupid. Okay. Common law. Okay. So set up a common law trust. Oh my God, what in the world? This is crazy. Common law trusts are used when a statutory trust does not make sense because, here we are, right up at the top here, of state regulations or tax concerns. For this reason, it is sometimes referred to as a pass-through trust agreement. I don't know. Common law trusts are regulated by the state's law jurisdiction. Okay. What a mess. Okay. So you got to get an EIN. It says here you can have a bank account in the trust name. Great. And you can register at the Secretary of State. You can do that. Great. It's optional, but might be helpful. That's a step you take if you want to get credit for your trust. All right. Different requirements for operating. Okay. It's just crazy. Like, why would you want the state up in your trust business? You don't. Okay. Common law means you create it yourself. All right, that's what it means. That's the difference. Okay. That's it. They just everything is the lawyers marketing themselves. Why do you want to pay a lawyer or accountant or they have to have a license, right, from the state to get you a statutory trust, right? Statutory trust. So who's going to give it to you? Well, somebody has a license to give it to you. Who gives it to you? Who's got those licenses? A CPA, right? They got a certified public accountant. They have a license from the state. Okay, well, and it's taxable. I just said, oh, you might not want to set up a state one because of taxes. Well, who wants to pay taxes? Who would be stupid enough to pick the trust? They got to pay taxes, and you need a licensed provider to give it to you. You got a bar card or a CPA. Okay, those are the ones that are licensed to give you a statutory trust. I mean, it's absurd. Why do you want to pay this extra fee? Why do you want to pay an ongoing fee of taxes and reporting of taxes? That's a statutory trust. But the common law trust, you can avoid that if you choose to. And so it's legal to. Yeah. Why would someone want to pay taxes? All right. Okay, that's Common law versus statutory law. Okay? That's what it means. Now, you're going to find this fascinating. It's like, well, okay, Jack, but I don't know if the IRS is agreeing with all y'all there because I get all this IRS talk. So I'm going to go through what the IRS says about common law, right? Of course, this relates to, you know, the first trust that I found. Okay, if you could have an in God we trust and then it says slash, right? That's a DBA. A slash in between two names of a business registered Secretary of State has a specific meaning of forward slash. Forward slash means it's a DBA. That is, those are three letters that mean doing business as. Means you're legally allowed to have two separate names for your business. And you could call it either name, and it's the same business. That's legal to do. If you file a piece of paper that says, hey, this business is that business, okay, that's like subterfuge. So why do you want to do that? Anyway, so what we have here is in God We Trust forward slash. It means doing business as USA Inc. It means it's doing business as in God We Trust, and it's also doing business as USA Inc. Same business, two names. Very simple. That's a common law trust. And there it is, registered as Secretary of State. We saw, oh, it would be helpful to register as Secretary of State. That's true. That's true. It might be helpful. Let's see what else we have here. Oh, there it is, a God We Trust. See, you can't use the word trust or bank at the end of a name of a business unless it's a bank or trust. You can't use it as a slogan. You can't, because it can't have the word trust or bank at the end of a slogan. You can't use it for any marketing purposes of any kind, because what? You could easily make it sound like it's a trust or a bank. That's why those two words, you go look them at the Secretary of State in all 50 states. They're like, they have special rules for those words, bank and trust, using them in naming. Okay? So you want to register your trust as Secretary of State. Well, it has to have the proper name to get registered. It has to have the proper attributes in every single way. It has to be written right. It has to have everything. But one thing it has to have to start off is the correct name, or they won't register it. It's not allowed. It's not allowed as a trust name unless it has the word trust at the end of it. So, of course, the In God We Trust is a trust. It has to be by law. You could say, oh, it's a slogan. It could be a slogan too, but that doesn't mean it can only be a slogan. That would be illegal. Why? Because I just explained you could only use bank and trust as for banks or trusts, because this absolutely would confuse things. And bankers run everything, right? Because they have the power to create money, so they could get anyone to do anything they want. Almost anyone, not me, but really every other anyone. They just get them to do it with the God We Trust. So we is important, it's important to figure out what we mean. Who we is. The study of signs and symbols and their interpretation. It's important to figure out who we is. But let's move on from there, because we're talking about common law versus statutory trust. So, look at what we got here. irs.gov/publications is the IRS publication. This is an IRS publication currently on the IRS website. That's it. Okay? So, common law and being a 501c3. Or IRC means Internal Revenue Code. That's Title 26 of the United States Code. They have another type of abbreviation, IRC. So it's 501c3. All right. Great. Let's see, what are they going to tell us here? Basic rules. Okay. Let's discuss the basic rules. What interests or rights, what tax, what is a trust? See, I did another video on what is a trust, and here the IRS it's the perfect definition. It really is. This is a beautiful definition. What is a trust? Trusts are one of the major forms of organization for federal tax purposes, along with corporations, partnerships, and governmental units, mental units. Great. Governing mental units. Fantastic. Some people, not the IRS, some people like me, to get a meaning across really simply is, hey, it's a type of corporation, right? It has a capital letter name and a 9-digit number. Okay, so a corporation, a business, right? They put it in as corporation as separate, but I mean, they're just trying to confuse things a little bit. It would be better, in my opinion, if it says trust are one of the major forms of corporation, but they choose to say organization. Okay, but really is not for just for federal tax purposes. Not only for that reason. Sure, it's for that reason, but it's also to do business, commerce. Buy and sell, use money in the financial system. Okay, that's one type of organization that can do it. All right, that's it. So it's completely legal to do it. All right, that's good. It's pretty simple. You go ahead and read this in detail. It's fascinating. It's really simple. It's great. Everything in this definition stuff from the IRS is pretty decent. It's pretty wonderful. Trusts are defined in terms of party, grantor, trustee, beneficiary. There are 3 parties, and they also can have other names. Other names here. Sure. Okay. And then it's like, who are the parties to a trust? This is property. This is kind of like, things that could go in the trust, basically. All right? Things that could be owned by the trust, including the documents of the trust itself, which is the corpus. If you have further documents past the declaration, they're called the corpus. In the You Got We Trust, also USA, Declaration of Independence is the primary initiated document, right? And then, to declare the trust, to initiate the trust, to start the trust. And then the corpus, this part, right? The corpus is the Constitution of the United States. So these are added rules. Okay, that's cool. And you can add on to those added rules. All right. More detail of the Declaration of Trust. Hey, we declare our independence, and now, we're going to add to that with a corpus. All right. Capital, money, estate, things, principal, res is what's written, and so on. So all this. Can a trust exist without assets? Basically, no. Really, it can for a little bit, but it basically exists to operate, with money, with assets, with trust. It's a business, so it doesn't really have a point to exist without it. That's without a trustee, yes, it could exist without a trustee because a new trustee would have to be appointed. Okay. How many trustees recorded? 1. A single trustee. 1. So you can start this trust we have. LibertyAidAcademy.org. Pay no taxes. Report no taxes. And do it yourself. All by yourself. Start it yourself privately. Right? Private. Come under the common law. You don't pay a lawyer. You don't pay an accountant. This is all legal. Okay? And I'm going to go through the IRS telling you this. Does a trust have to be registered with the state? No. Do not file their governing instrument with the state to become legal. No, they do not. However, it can be useful. All right? It can be useful. Okay, what does a trust begin to exist for 508A purposes? Well, we're not in we're trying to get the 501c3. Are courts involved? Yeah, but there's legal proceedings involving the administration of trust are usually proceedings in chancery. Where's a chancery court? They never take trust to court. You follow? That's the point of that. What? Who's got a chancery court? Crazy. Can a trust exist without beneficiaries? Yes, it can, but you have to have an intent to do it. That's what that's going to say there. You want to go through it? Yeah. Determine and honor the trustee's intent. Okay. Yeah. You don't have, in other words, you don't have to name your beneficiaries when you start a trust. That's all. But your intention is to do it at some point. That's it. That's all that's saying. 8. Oh, yeah. Can a trust? Yeah. Okay. Can a trust exist without a written document? It can, but it will not pass the 501c3 test. Now, yeah, you need it written. Let's see. Only express. It has to be written. Okay, it needs to be written. And one type that it needs to be written is a declaration. Declaration of trust. That's what we have for you here. All right. In your course, where you get the McKag Mastery Trust, you learn to do this. That's what type it is. That's right here. It says declaration. Yeah. Can a trust carry on business? Trusts are not generally precluded under state law for conducting business. So, yes. Yes, there's special rules for taxes. Sure, there are. Yes, there are. Yeah. Isn't that great? How do private trusts differ from charitable trusts? Oh. 501c3 requires organizations be exclusively private, and yeah, see, you can set it up yourself. You can decide whether it's charitable. Setting it up yourself doesn't mean that it's not charitable. Setting up yourself just means you set it up yourself privately. You can decide whether it's for charitable or non-charitable purposes. Okay, and charitable means it can only be for that. Okay, so. There are limited terms for private trust, yes. How does trust income differ from trust principal? This has a little piece in there which is good. Allocation of trust assets between trust and principal. Okay. There was something here I saw that was pretty good, and they allocate to the principal. You can decide, if you get money in, whether you keep it or what you want to do with it. That wasn't very well written. Beneficiaries income, remember, you don't have to decide all that stuff. Okay. Can a revocable trust qualify under 501c3? I've said this many times, but let's just read it. A revocable trust ordinarily cannot qualify for exemption as 501c3. Irrevocable trust, nope, has to be irrevocable to be tax exempt. Get me? All right. What's the difference between inter vivos and testamary? One is when you're live, the trust is created. One is after your death when it's created. That's pretty simple. We don't community trust. This is little details here at the end, but it's not. I just thought I'd go through this and show you that the IRS here under the common law, yeah, this is like application stuff which we don't get into. This is kind of like, okay, but that was a lot of good information in this and stuff I've taught, and the IRS is teaching you now too. Okay, the difference between the common law, statutory trust, and people are like, common law, that's not illegal. Well, according to the IRS, it is. So that's what we're getting out of the taxes from, is the IRS. So it matters what they say, and here's what they say. Isn't that wonderful? Okay.